Very good morning, everyone. So, today I'll be discussing with you some very important conceptual adjustments which the examiner used to ask in our question number one, that is of 15 marks, right? And you know that mostly it consists of PGBP adjustments. And they will give you such a strong conceptual adjustments that sometimes we get confused that what we have to do with this, whether it will be taxable under PGBP, whether it will be taxable under any other head, or it will not be taxable at all. So let us discuss some few adjustments specifically from the charging section of PGBP. What is the section number of PGBP charging section? See, if I talk about 1961 Income Tax Act, then it is 28, we all know. But if I talk about the new law, which is Income Tax Act 2025, the section number is 26. The charging section of PGBP is 26. Although it's not very important to learn the section number, but you should have an idea that what this section number is all about. So one of the important adjustment which I would like to discuss with you is the compensation which we receive at the time of modification or termination of a business contract. You understand, we all know that whatever the compensation which you receive on termination or modification of a business contract, that is our PGBP income. But let's say there are two parties, let's say there are two companies, X Limited and Y Limited. And they both entered into an agreement. Let's say X Limited would like to buy a machinery, correct? And they would like to buy a machine. Let's say it is of rupees 10 CR. And they say, Y Limited says that, okay, we will be giving you this machinery and we will be giving you machinery in, let's say, 2 months. We'll take 2 months time to deliver this machinery to you. They entered into an agreement. They have written everything this in the agreement. And they have also written that if Y Limited, you will not be able to deliver this to me within those 2 months, you have to pay extra amount also. Let's say you have to pay interest of 1% per month. You have to, of the cost of the machinery, you have to pay interest also. Now, let's say your examiner gives you this point that Y Limited has delayed in giving this machinery. And because of that reason, they have delayed for few months and so, and because of that, they are giving you, let's say, for example, 5 lakh rupees as the compensation for delayed amount. Now we all know, sir, this is the amount which you receive because of the business contract. So this is our PGBP income. And how the smart examiner will test you in the penal account, when you will get this question, the penal account, they will say that this is the compensation which we have received of rupees 5 lakh because this machinery was delayed to us. Okay. So what you will do? Most of the students will say, sir, this is covered under the charging section, section 28 old section, section 26 new section. It is covered under the charging section of PGBP. So it should be there. We will not do anything of it. So we'll ignore this particular adjustment. Guys, please tell me, what is the charging section was telling you? If there is a modification of a contract, if there is a termination of the contract, please tell me whether this contract is terminated. No. Whether this contract is modified, the answer is still no. Neither the contract is terminated nor the contract is modified. So this is not covered under the charging section. There is a very important landmark judgment, I would say, of Supreme Court, Saurashtra Cement, which says that this amount which you have received is not on modification, not on termination. So this amount is not covered under the charging section. And since it is a capital receipt, and you all know that capital receipt generally we don't tax in income tax unless and until they are specifically mentioned in the law. So this is not mentioned in the law. So this amount is not taxable. So what is the taxability of this 5 lakh? It is not taxable at all. Have you understood? First of all, the contract you have to see. Now what you have to see, guys, you have to see that whether this contract is terminated. No, this is not terminated. Whether any of the terms and condition of this contract is modified. No, it is not neither modified also. So this is not covered under the charging section. So this is the thumb rule, you can say. This is the key principle. By applying whenever you will be applying this provision, you have to just see whether the terms are modified, whether the contract is terminated. If it is none of the case, then please don't make it taxable if it is a capital receipt. Correct. So how the examiner will ask you, let's say adjustment number 1, I have given this in the form of adjustment. XYZ Limited entered into an agreement with ABC Limited. So there were two parties involved for purchase of new manufacturing plant. Okay. The agreement provided that in case of delay in delivery of machine, if you actually delay in delivery, then you have to pay 0.5% of the cost of the machine for every month. 0.5% of the cost of the machine you have to pay. Okay. ABC Limited delayed the delivery. Okay. And paid 40 lakh as compensation. Boss, whether the contract is terminated? No, sir, it is not terminated. Whether it is modified? No, it is not modified. So this 40 lakh rupees should not be taxable. So in your exam, if you will find this question that 40 lakh is credited in your account, please don't make it your income. Please delete it from here. Don't make it your PGBP. Correct? And let's say, for example, it is not there in your, it depends upon case to case. You know this because let's say you are so smart, you know this, that in P&L account, let's say if it is not there, but as per the adjustment in information, this is one of the point, 40 lakh rupees. So obviously it is not actually disturbing your P&L account. So you will not do any thing in plus or minus. You will not do anything, but you have to give a note that this 40 lakh rupees received is not taxable. And it's good that it is not there in the P&L account also. So you don't have to do any adjustment, but you have to give a note to it, right? See, so what is the thumb rule? Whether the contract is modified, whether the contract is terminated, then only please make it PGBP, otherwise don't make it. If it is a capital receipt. See, adjustment number 2, I have given the second type of question also to you. ABC Limited entered into a long-term distribution agreement with another company for distribution in southern zone of India. So in southern part of India, they have said that we will be your sole distributor. Okay. During the year, the terms were modified, and now the distribution will only be in the Tamil Nadu state. Now earlier they were saying that you will be distributing our goods in all the southern part of India, in Karnataka, Kerala, Andhra, Telangana and Tamil Nadu, but now they have modified. Now they are saying that your distribution will be restricted only to Tamil Nadu. So is this a termination of the contract? No, it is not a termination. Is it a modification in the contract? Yes, it is a modification. So this is duly covered under the charging section of PGBP. So this 25 lakh should be taxable in PGBP. So in your P&L account, if in your examination you will get that 25 lakh rupees is already credited in your P&L account, then it's perfectly fine. Please keep it there as well. So you have to give it a note that 25 lakh rupees is correctly credited in the P&L account because it should be my PGBP income. But however, let's say for example, it is not shown in your P&L account. It is given to you by way of information. So please add this in your PGBP because this should be taxable as per the charging section. Correct? Now, the second favorite adjustment of the examiner which they give in this question is about the Keyman insurance. Guys, Keyman insurance amount is always taxable. See, sometimes some students might get confused, sir, if we receive this insurance money on death, we know that we have heard it somewhere, we have learned it, we have read it somewhere that whenever we receive it on death, then it is exempt. Guys, it is correct. You have heard it correctly, but not about Keyman insurance. Other life insurance is exempt if it is received on death, but apart from Keyman insurance is always taxable. So let's say if this amount is received by the company, then it is taxable under PGBP. The charging section says it. If it is received by the employee, then salary income. In case it is received by some other person, then it would be your IFOS income, but it is always taxable. So now a company received. Who is receiving this money? The company is receiving this 18 lakh rupees under the Keyman insurance policy on the death of the managing director. So some students might get confused, sir, it is a death, so this is exempt. No, it is not exempt. It is duly covered under the charging section of PGBP. So 18 lakh should become your PGBP income. If it is already there in your P&L account, then it's good. Very nice. You don't have to do any adjustment, but you have to write a note that it is correctly credited. But let's say, for example, it is not credited in your P&L account. So please show this in your PGBP. Correct? Fourth, again, one of the favorite of the examiner. What they will tell you, Mr. A sold his business for 10 crores. He sold his business of 10 crore. Okay. And also received 1.2 crores under an agreement whereby he agreed not to carry on the competing business for 5 years. Discuss the taxability. It's a non-competing fees. Very nice. It's a non-competing fees. We understand it is covered under the charging section of PGBP. So it should be our PGBP income. But how much? How you will make it taxable? What about 10 crores and what about 1.2 crore? What is the amount of non-competing fees? The amount of non-competing fees is 1.2 CR. So 1.2 CR which you are receiving because you will not be competing with him for next 5 years. So this is your PGBP income for sure. And what about this 10 crore? Quickly tell me what about this 10 crore? 10 crore he has received. It is a capital gain. He has received by selling his business. So let's say for example, it might be the scenario of slum sale because 10 crore he has received. He sold his entire business. He sold his entire undertaking. So it will be the case of slum sale. And you know that in capital gain, we'll make it taxable as slum sale. In the old law, it was section 50 capital B. You understand now? 50B if you are giving your exam in November 2026. So 50B if you are giving your exam in May 27 and onwards, then we have section 77. The new section is 77 as per the new law. So this 10 crore will go in the slum sale computation and 1.2 crore will go in PGBP. This is the non-competing fees. Right. Another gift. So we understand that whenever we receive gift in the course of our business or profession, please make it your PGBP. The gift which you are receiving, whether it is in monetary form, non-monetary form, doesn't matter. Whether it is a capital asset, not a capital asset, does not matter. Guys, in IFOS, we know, in IFOS, the gifts only that are capital assets in nature, then only we'll make it as a taxable gift in IFOS. But PGBP, all types of gifts which you received in the course of your business or profession. So whether it is car, whether it is a movable asset, whether it is an immovable asset, doesn't matter, right? So in this case, a supplier gifted an expensive luxury car to XYZ Limited. So supplier has gifted a luxury car to XYZ Limited for achieving exceptional sales targets. The company argues that since no money has been received, nothing is taxable. Discuss. Is the company correct? No, it is. They are not correct because the gift which you received in the course of your business. Why? Because you have actually done so much of good sales. So that is the reason you are receiving this money. So please make it taxable under PGBP. So how much you will be making it taxable? The value of the car. Let's say the fair market value of the car is 40 lakh rupees. So please make it your business income 40 lakh rupees. Now the examiner will not stop here. He will ask that, let's say for example, this company, when they have received, please make it PGBP. That is for easy. That is for sure. Now the intelligent examiner, the smart examiner will ask, like me, they will ask that now this company has brought this car into their business. So how much depreciation you have to claim? So we understand on car generally it is 15% rate of depreciation. On what amount? Because they have received it for free. No, the actual cost here will become the value of that perquisite, the value of that particular car which has already made taxable under PGBP. So for your depreciation purpose, please add this in your block at the value of 40 lakh and 40 lakh, please compute depreciation. Correct? So these are some of the common and interesting and important adjustments which examiners generally ask in your PGBP chapter. This is charging section number. This is from the charging section. I'll be discussing with you more like this video. I'll be discussing some more topics. So please stay tuned. And also, if you have not liked the video so far, please like the video and also subscribe to the channel. Thank you so much. See you soon in the next video.